The Central Bank of Nigeria has over the years put in place several measures to mitigate risks in the financial system. From the introduction of the automated teller machines ATM operations in 2002 to the Global Standing Instruction GSI of 2020, the Apex Bank has done a lot to de-risk the system. Last week, the CBN brought together risk managers in the country for its second National Risk Management Conference. We have that for you in today's package, plus expert analysis of the tight monetary policy stance of the bank at its last MPC meeting against the recent economic developments. Stay tuned. We'll be back after this break.
If someone calls or sends you a message that you have payment issues with your bank and requests that you reveal sensitive information, end the call and don't click. It might just be a scam. No bank will ever ask you for your personal identification number, PIN, mobile banking password, or your card verification code, CVC. Scammers always sound genuine, but don't fall for their bait. Don't respond to phony emails or SMS, and don't click on any dubious links. Even if the other party calls your date of birth or your BVN, don't give them your security details. If you suspect there's an issue with your account, the safest thing to do is go to your bank or call the number provided by your bank directly. Protect your bank details so no one steals your money. This message is from the Central Bank of Nigeria, CBN.
Welcome back. The Risk Management Department of the Central Bank of Nigeria, in conjunction with the Chief Risk Officers Forum, last Thursday 27th and Friday 28th October, provided an opportunity for risk managers across the financial system and across the country to gather together and deliberate on risk management in the promotion of financial system development for economic growth. The two-day conference, which held in Lekki, Lagos State, focused on the link between financial system development and economic growth and how sector-wide risk management can foster financial system development. The conference also aimed to identify and proffer solutions to existing and emerging risks that have impeded the development of the Apex Bank. Addressing the participants, the Director, CBN Risk Management Department, and the Chairman, Chief Risk Officers Forum, Dr. Blaise Ijebo, said the time has come for risk managers to be more creative and go beyond telling organizations what cannot be done to telling them what can be done to achieve set goals and objectives.
And one key area we can help is to begin to come up with ideas how we can grow the financial system in a way that is sustainable, is low risk, and achieves its objectives. The objective of the financial system is usually to reach more people, to create more financial inclusion, create more credit so that organizations and companies can grow and become large corporates and the economy can grow. The central bank has done a lot. In the last 10 years, it has been involved in multiple initiatives to reduce risk of lending, to increase financial inclusion, to also extend the growth of different industries. If I start from the BVN, many people wonder why do we go into BVN. The whole idea is that if you have a unique identifier for the banking system, it becomes easier for banks to lend to retail customers. And that has seen a shift in lending to retail customers over the years.
In her paper presentation on risk management in the promotion of financial system development for economic growth, Director, MPL Advisors, Mrs. Remi Odunlami, said the financial system globally has undergone a series of changes and development over the last 4 decades, creating great opportunities but also raising financial and reputational risks.
Over the 20 years since the 2005 consolidation, we've moved very significantly into digital kind of banking. We've got a lot of electronic banking. In fact, I think very few of us have issued a check in the last 2 years. Everything's done by transfer. But that brings into play operational risks. It brings into play the technology risks that we as risk managers need to keep an eye on, and the regulator who sees the whole picture really needs to get a handle on. So we do see different regulations coming through which speak to each of those risks. And these are the underpinnings of the financial system, and they're the things that basically grow and they support the financial system development, and financial system development, as we've heard earlier, is intrinsic to economic growth. There was, in 2002, the commencement of ATM operations, and then significantly for me, in 2004, the introduction of the BVN. As a lender, the BVN was critical. Prior to that, we had people with variations of the same name, crisscrossing the system, and basically borrowing here, borrowing there, and when you wanted to call in your loan, he walked off on you, you had a bad loan, he opened an account somewhere else. The introduction of the BVN in 2004 made that very much more difficult for all of them. Another thing that we needed to deal with was in the check system, and that was truncated. Well, when the central bank introduced the check truncation model in 2012, they took out the kiting that we used to deal with. We used to have people who would, because then, if you paid a check in Kano, it took 7 days to get value in Lagos. We had people who would borrow against the check that they deposited in Kano with the idea that we'd get value in Lagos. By the time the check cleared and was returned, he had gone and the money was gone. So the check truncation model that was introduced in 2012, which reduced significantly the timing that it took to clear checks, meant that the level of kiting was reduced. In fact, I think kiting died away, and it's probably a word that many people don't even know any longer. But these are steps that the central bank has taken to reduce some of the risks that we were dealing with. Similarly, the global standing instruction, which was introduced in 2020, has tied in with the BVN and has tied everybody into their loans across the system. I cannot have 100 million naira in Sterling Bank and borrow from UBA, our customer, who we know is the same person because of his BVN, has an outstanding loan over here. You've got the money, can you send me the money? Let's clear it out. That has also worked to reduce the level of NPLs in the system, because the NPL rate was a major risk for the banking system, and it's one that we do need to keep well under control. It varies from bank to bank. The central bank has set a working limit of 5%, and right now, as an industry, we're below that figure. But that is also assisted by the fact that people know that they can no longer borrow and still hold their money in reserve.
Mrs. Adulami commended the efforts of the CBN in moving resources towards economic growth through its development finance activities and interventions, as the rail and agricultural sectors, which are critical to the economy in time past, were not getting the required attention on account of inherent risks.
Other things that they've done, the RT200 non-oil exports proceeds repatriation scheme and the establishment of a national collateral registry are all areas that they've used to try to bring out and to support the industry. I think we do need to give credit to the risk management department of the central bank and the central bank and the regulators as a whole for the efforts that they have made to assist us as risk managers in dealing with the various risks that we see. As far as risk management goes, we've had an interesting journey. We started off back in the day with no clear way of identifying risks. We knew there were risks. I mean, banking is a risk business. But what was the risk? The only risk we really identified was credit risk. We knew that there's a risk when you lend somebody money that he will not pay back. But over the years, we have come to understand that we've got credit risk, we've got operational risk, we've got information security risk, we've got legal risk, we've got strategic risk, we've got risks upon risks upon risks. We've cut and diced them, and we've come back to enterprise risk. But we've come through from just a kind of vague understanding of risk to some sort of uncoordinated assessment of risks and silo reporting, because we've got about, depending on which organization you're in, we've got between 6 and 15 risk buckets, probably reporting into different places and being treated in silos. Then we moved to harnessing all of these risks in one person within the organization, the chief risk officer, who generally speaking is a jack of all trades and, shall we say, master of none. But anyhow, and we now decided to get together as risk officers, and the CRO forum was set up so that the experiences could be shared, and by that mitigated, because it does help if somebody else has done something and you hear about it before you experience it.
The NPL Advisors Director noted that presently the economic environment is characterized by exchange rate weakness, persisting insecurity, debt sustainability concerns, inflationary and fiscal pressures, which risk managers in the financial system must navigate in order to collaboratively deal with risks in a constantly changing digital world.